Getting ready for what some analysts are calling the biggest conference call in years. Let's talk to Nicola Leske from Reuters and Jonathan Marino, editor of Reuters PE Hub. Okay, guys, earnings out after the bell today for Apple. Now, this is the quarter, the holiday quarter, where they had the iPad mini, came on the heels of the iPhone 5, the iPhone 5 rollout in China. Big news here. Jonathan, what do you think? Margins, what are we looking at here?
Maybe a little bit too early for me to start guessing, but let's look at the bad side maybe. While Apple has gone sour, they've had obviously the big mapping fiasco, the debacle, the firings that came after that. We've been hearing now reports of producers over in China cutting orders, reducing orders for what they're going to be using to put together future products. But right now,
fewer screens, parts, all of that. Yep.
They get probably a good holiday shot of news in the arm, because folks went out and spent for their products. I think the real test is going to come down the road when you see, their numbers for the first quarter in 2013, second quarter in 2013, and obviously also how much Google chips into their market share overseas.
Yeah, and let's not forget, Apple has it kind of hard. They can't just meet targets; they have to beat targets for investors to, not be worried about them losing out in the mobile device markets. Thanks to Samsung, for example. Yeah.
Exactly, losing their market share. But when we do talk gross margins, it's been falling. I mean, their own guidance, they're pointing to about 36%. Last year at this time, their margins were about 44%. So clearly those have been dropping. And, the other thing, though, is, the company's stock is still a bargain, right, for the most valuable company out there in terms of what it's trading at. So but the other question I think is also iPhone sales. You're talking about market share too. They don't really give any numbers. We know that this 2 million figure was good, but going forward in China, perhaps the China Mobile deal, Jonathan?
Maybe. It seems like they've got a long way to go, and also areas like Korea, where they have to penetrate a humongous market, where they've been kind of losing ground now. One big factor for Apple is that users of Apple products tend to spend a lot more time on the device than they do even on something like, say, Android, and that's probably something that they could even do a little bit more to push in terms of marketing.
Right. Verizon's earnings were out, and they sort of pointed to the fact that they did pretty well as a carrier on iPhones.
Right.
So we'll have to see. All right, so that's big something to watch for, and I know that, John, you have your show Tequity that'll be on later today, so you'll be sure talking lots more about that. All right, let's move on and talk Netflix, also earnings after the bell. Probably going to report a net loss there, but it's okay if it's in line with estimates. Right?
Yeah, exactly. We might get a little bit of surprise out of Apple. The surprise would be if anything good happened at Netflix. They've probably got a little bit of a ways to come here. What they really need to focus on the most now is obviously streaming growth. In 2013, they could see huge headwinds if either Apple or Google successfully begins to move forward with a television product.
Right.
Yeah, and we're going to have to look for what they say, how much they're going to invest, because they're just going to need a lot of money to invest in movies and TV shows, because obviously content is what makes it. And as you said, Apple and Google and Amazon are breathing down their neck. So it'll be interesting to see what they say about their investment strategy.
But Nicola, also, so they've had some good deals, because the stock's been on a bit of a tear. Deals like that Disney deal, investors loved.
And Time Warner, yeah.
And the Time Warner deal as well. All right, so in anticipation, the stock is up 3.5% today at Netflix. IBM and Google riding the wave of strong earnings yesterday. Let's start out with Google, because Google's up 6% today. International and mobile ads, the name of the game over at Google, John?
And also, it seems like their cost per click to the advertisers had been coming down for almost a couple of years now. Finally starting to level off. Maybe they're going to have a little bit more of a permanent margin to work with. Also important to note that they've spent $2 billion recently in London and in Southern California trying to expand into new centers here. And then, there's also the fact of the growth in mobile and in YouTube, but it kind of seems like the jury is still out permanently.
Yeah, and don't forget, as more people across the world get more mobile devices, they're going to use Google more. So, which is why international markets drove their core search engine business. So that's good for Google.
All right, a slew of brokerages raising their price targets today, which is helping juice this stock, as I mentioned, up 6% today. All right, let's talk about IBM, because Nicola, you wrote the earnings story about IBM yesterday, and particularly, compared to other tech companies, is this sort of a bellwether in terms of signaling that there's going to be more spending tech, or is this just specific to how well IBM is doing?
Well, that's a big question. IBM has a big scale, a big reach, so you'd think maybe, them doing well bodes well for the entire tech spending. But they are kind of a very special company because they've looked into services and software so much earlier than everyone else. And they're just really good at what they do. So we'll have to see. I think it's a little bit of both.
All right. Stock is up 5% today. Thank you to you both. I'm going to now move by myself back to the Market Monitor and Conclude here on Coach, because Coach reported earnings that missed Wall Street's earning estimates for the holiday quarter. The stock is down 15% today. Coach is citing that there's stiff competition in the women's handbag world. And ladies out there, you know what I'm talking about. It's dog eat dog in the women's handbag world. And Coach's chief executive Lou Frankfurt is saying also consumer anxiety that sales had fallen off in North America due to consumer anxiety over fiscal cliff worries. Now, before we poke too much fun at that, let's take a look at this chart that we have that compares the share price of Coach with the University of Michigan Thomson Reuters Consumer Sentiment Index. And you can see here that they nearly mirror each other. So, he may know what he's talking about there, but of course, we're going to have to see. Michael Kors, are they going to point the finger at the fiscal cliff? Haven't done so yet, but their earnings don't come out until February 12th. That's it for us. Remember, follow us on Twitter at Reuters Insider, and there are lots of great videos also at Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.